Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Thursday, June 23rd, 2011, is brought to you by Realtic. All right, guys, let's get right into the mix today. What you can see here is the market's having a drastic down day, although we are off the lows of the day. Dow is down well over 200 points. It is now only down 150 points. Nasdaq is only down 6.5 points as Apple Computer is soaring today, and the S&P 500 is down about 14 on the day. So technology is leading today. There's no doubt about that. The leaders in technology on my watch list are Research in Motion, Intel, Apple, and Baidu. All right, those are the leaders right now. We can take a look at Apple on the intraday chart. Then we'll come back to the SPY, which mirrors the S&P 500. In any case, look at this gap down on Apple, and look at the reversal that's taken place today. Now, again, looking at Apple's chart, you probably think the markets were positive today, but they are not. Again, the Nasdaq though is only down about 5.5 points right now. All right, let's go back to the SPY and discuss what's going on. This is partially based on the dollar. The SPY getting crushed today, and remember, this is the intraday 10-minute chart, which again mirrors the S&P 500 on a 10-minute basis. So again, you're looking at an SPY that's down 140 or 1.4 on the day, or $1.40. And the key here is to really notice the bottom line. Exactly what's the cause here. And if we go to the dollar chart, look at the dollar today, a monstrous gap up. This is just a huge gap. Notice how the dollar has faded a little bit off those highs. That's really where you're seeing the bounce in the market. In addition, a lot of this has to do with oil. All right, crude is getting crushed today, and this is an absolute blockbuster drop on crude oil after Obama and the IEA, which is the International Energy Association, there has decided to release a bunch of barrels of oil from the strategic reserves. I believe it's 6 million barrels, 60 million barrels, excuse me. That's basically 2 million a day for 30 days they will be releasing, and that's really caused oil to get crushed. Now, you want to know something crazy, folks? I'm going to tell you something crazy right now. I had a hot chart and alert out a couple days ago at a magic number on the USO to be a buy level. What level was that at? It was right here. $35.35. It triggered today. We are in the money. I've already sold half my position for over 50 cents. 50 cents already on the USO, which is only a $35 ETF, and I'm holding the rest for at least $1. And this is in one day, folks. We got filled today, already out half of this in profit zone and with a break-even stop on the remaining portion. And these are just the trades that continue to be put out, folks. I mean, you come into the research center, you take the free trial for 7 days, you're going to get some of these great trades. You probably make enough to pay for multiple years of the research center just in 1 week of free trial. You know, someone actually was talking today in the chat room. They made so much money, they said they paid for the chat room for multiple years inside of the chat room just within a couple trades this morning in the first hour. That's how good the intraday stock chat is as well. So, in any case, this is what you have. Notice the little bottoming tail on the USO as well. That was a dead-on signal. The USO is now, again, hovering just around that $36 level after being a buy at $35.35. All right, let's take a look at a couple other things now. Again, with oil's weakness, we know Chevron is getting killed and Exxon. This is the chart of Exxon. You can see as oil's come back, Exxon's come back, and Chevron has come back as well. And we can take a look at Exxon next. That was Chevron. And you can see the same thing. It's starting to uptick a little bit off getting crushed. If you look at the daily chart on these things, it's actually broke to key level here. If I zoom out a little bit, take a look at this. See this little bit of a pivot low, actually a little bit of a river theory today on this chart, on the daily chart. Probably this eventually goes to the 200 moving average in the short term. I will monitor this trade very closely because if it gets down to that 200, I will probably be a buyer on the ExxonMobil. Chevron, same general thing. I'll probably choose one of the two. I won't buy both. The positive thing about Chevron, though, is it actually hit this lower level. Take a look at that line right from this major level. In fact, if we zoom out a little bit more, you can see how that key level, these two lines have had on my chart now for months. And we just tagged the lower range, and we actually bounced back above. So it's a good move on Chevron here with an over $1.30 bounce off the lows of the day. All right, other trades in motion today. There are Chinese stocks inching up again. We're continuing to see upside on Chinese stocks. That's been a beauty. Moby I gave out yesterday or 2 days ago at $5.60. Today it hit $7.60. That's basically a 40% move on the stock here in just a couple days. And again, I gave that out right here, $5.60. And look at the move up on Moby today. All right, so we'll continue to follow that. There have been other Chinese stocks that have been strong today, even in the weak market. Sina, which is a larger Chinese stock, good bounce off to 200 today on the gap down. That's holding up pretty well. I'll continue to monitor that very closely. I'm also close to putting out a small cap play in the hot charts and alerts. So if you join and take the free trial, you'll get that this afternoon. Most likely, I'll put that out around 3 o'clock today if the markets are continuing to recover. I was going to put it out this morning, but really, when the markets are down 200 points, it's not the best time to put out a small cap or a large cap at that. And granted, we got filled on some nice plays, and we're in the money on those larger plays based on magic numbers that, again, proprietary techniques allow us to find. All right, let's go to a couple other things here. Taking a look, we can take a look again at Baidu, BIDU, another Chinese stock that's up. You can see Baidu having a nice day, up $2.25. If we go to the intraday chart right here, that's a nice little bounce there. And again, we'll follow that a little closer. But nonetheless, these stocks are all oversold. And to be honest, I hate to say this, guys. Well, I don't really hate to say it. I don't really care either way. But I think this market could be done for the downside now for the next 2 weeks. In fact, I'm going to go on record and say that right now. Mark this word, mark this time in this video at 5, just about 6 minutes into the video. I think we don't sell all and take out these lows until after the July 4th holiday. So we'll go out on record, and I'll say that in record, and we'll decide, or we'll see if that turns out to be true. All right, and again, that's what I'm saying right now. We'll find out if it turns out to be true. But again, just note this line here. This line that we hit today, not only the 200 moving average was officially pierced, but you also hit a major pivot stretching all the way back to 2009. All the way back to 2009. So again, with that being said, I may end up holding my oil trade for a little bit longer, maybe for another week or so, try to get even more than $1 out of the rest of my second half of the USO. All right. But nonetheless, great bounce on the spiders today. Great bounce. A lot of panic this morning. I noticed that in the market, which is also telling of a possible little bit of a bounce. And I don't think the market's going to go up much. But don't think that I'm saying the market's going to have a big rally. I don't think that's the case. I just don't think they're going to break through these lows in the short term. I'd be very surprised if they are able to take out this pinkish line right here, which slopes up from the 2009 to 2010 lows. That's a massive level. That's probably the biggest level in the last since the bottom was put in this market that we've touched in this market. All right. Now, if you get below there and you confirm, you're going to probably eventually head down to the 2010 lows, which will be major support. And then ultimately, if that breaks, then you go to the 2009 lows. If it holds above here in the longer term, you actually could go back to the 52-week highs up here. So, I mean, there's a lot of things we're watching here. You got to understand this and be involved. There will be more swing trades I will be putting out. So be ready on this, guys. Be ready on these swing trades. They are going to be big. We've been making money hand over fist. And the crazy thing about it is we've been making a lot of our money on the swing trade side, on the long side, all right, by buying stocks that hit off of magic support levels that we calculate for our members and putting out alerts. Just like the USO today comes right down to my magic number, my pivotal proprietary level. We pick it up, and again, already we're in the money 50 plus cents on the trade and taking half off for a beautiful move and looking for another buck or so on the second half with a break-even stop. And again, we did that with GE earlier this week, and we did that with some of these other plays. The Qs, nailed the Qs beautifully. I bought that. Let's just talk about that move as well because it was such a good one. My Q's entry price was right here, folks, and we nailed it, and we sold into early this week on the big pop. And obviously that was a genius thing to do, as it since then it's sold off back down. We basically sold it the high and the pop, made over a buck on it, and that's all you can ask for there. Again, holding a stock for 1 to 3 days is in this market is perfect, and that's why actually swing trading is number one out there, because you have to be ready for these sharp moves up and down. All right, if we hadn't sold the Qs at this level, it would have come almost down to our entry down here. Granted, it's bounced back since then. All right, again, you got to take profits, as we always talk about, and maximize profits. All right, so just to get yourself situated here, remember, free trial to the Research Center 7 days, free trial to the chat room 7 days. The profits will continue to roll. It's just the way we do it. 90% success rate on trades, guys. There is no one out there. You don't even care about hedge funds. They're not even going to do as well. Trust me, I've been recruited by plenty out there. And again, I'm sticking to this. It's less stress, believe it or not, and we're going to do what we do. I'd rather just handle it, help, and trade my own account. I trade my own account. There's no reason to work for someone else at this point. And I'll give you guys the inside information. All right? So come join us here at inthemoneystocks.com, and I'll talk to you soon. Take care.